Right, so good evening, everyone. Welcome to our weekly analysis of the markets. Let's see what we have. So today we'll be looking at how to do top-down analysis. So because today is a Monday and this is a new week, we'll start from the weekly charts to see what we may get for the week. So we're just going to look at the potential levels that we'll be interested in. So we'll look at a couple of pairs, and if we have any pair that we're interested in that we want to look at, please do let me know when we go through these ones here. So we start off with pound USD. So this pound USD, pound weekly charts. So all I do, I just come to the chart and look at what has price done before now. So you can see it has a major low down here, right? And it's moved up, pushed back down, moved up again, pushed a little bit here, and then pushed up here. So what does that tell you? Price is pushing up. Okay, so on the weekly charts, currently, price is pushing up. But in the last few weeks, we see this sideways movement. It's not showing a lot of enthusiasm to continue going upwards. So maybe it's just stalling to then eventually push up, or is stalling for it to then reverse. So, but we are not too concerned about what it's going to do. We'll just look at what we have right now. So we'll mark the high of this recent candle. That's last week candles. Just mark the lows there as well. So we just say to ourselves that if price from this weekly chart, if price breaks this high, all we'll do is look for a pullback and then for it to possibly push up, right, to these highs up here, possibly. Okay. Or if it breaks these lows here, we'll just look for a pullback and then look for it to go further down, possibly to these lows here. Okay, so that's on the weekly chart. Okay, but we're not trading the weekly charts. This one just gives us the framework that we want to use. So we go to the daily. So right now on the daily, what can we see? We see a similar thing happening. If I squash that in a bit more, you see price pushing up, pushing down. Another break there. Okay, let me do this way. Pushed up, pushed down, lower high, or rather higher low, then another higher high, some sideways movement with some bit of bearishness, and then last week it pushed up heavily, or rather if you beginning of the month, when was this? Yeah, so it's pushed up now, and at the moment it's stalling right there. Okay, so we're bullish on the daily time frame as well. However, we can see that price, it has given us in the last 2 days before now, we see it pushing down. Okay, so it's currently just taking these lows here out. So is it going to be sustained? That's the question that we are going to ask ourselves. Okay, if it's going to sustain it, then it's likely to go for this next lows there, if it's going to sustain it. However, if not, this candle that is still being, it's not yet completed. It can go all the way up there, push back down, and then continue upwards. So we don't have any trades yet on this daily chart. There's no major signal, except if we were trading last week. So this will have been a nice signal for you to go short. Okay. Okay, so let's look at the 4 hours. I'll just stop on the 4 hours. So on the 4 hours, what do we have? So we're squeezing it a bit more. That's zooming in a bit more now to look at current price action. So this was a high at this zone there. What did price do? It broke these lows. So from this high, break of structure to the lows. So that's a lower low. After that, what did it do? It pushed back up, lower high. After that, what do you expect next? You see price comes down, breaks this structure again. So lower lows, lower highs, lower lows. So from these lows here, what do you expect? Where is your valid range now? Okay, you see it's pushed up. Oh, that's too much. Okay, so it pushed up to this range here. It could not hold, and then it's pushed back down. Okay, so from this 4-hour chart, you can see it doing lower lows, lower highs, lower lows. It's tried to push up. Now it's come back down in here. So until it breaks this low, this last low here, we are still in we have a bearish slant now because price has come to these highs here and it could not break this high here. Okay, if you went to a lower time frame, you'll have seen some bullishness here, making making higher highs, higher lows, higher highs. That's on the lower time frame. But on this particular time frame, that's our 4-hour time frame, it has not yet made a lower low. So that is what we're expecting. Okay, so let's see if it will do that. If it does not do that, once it breaks this high here, this last bearish candle, once it breaks this high, then it's likely to go to break this other high here. So right now, if I use our system and say these two bearish candles has formed an engulfing candle to this last one here. Okay, so what I'll then do, I can place a sell right now and put a stop loss at the highs there. And where will be my target? My first target will be these lows here. And then the next one will be down, further down there. And then if I still have another entry, I could push it further down there. Okay. So that will be the setup for pound USD at the moment. It's looking very bearish. And let's see if it will hold. If it does not hold, I would expect price to push up, then perhaps just pull back a bit, and then go all the way to the highs here. So it will stop this one out here. And then we'll just look for another setup to go longs with it. Right. Okay. So remember, we're always trading over a series of trades. We're not looking at just one trade. We're looking at it over a series of trades, over a series of setups. Okay, we're not just taking one trade. Okay, so that's the setup for pound USD. Let's look at Euro USD. Okay, we'll just do the same thing as well. We see this is the lows. Price came up, pushed back down, came up again, pushed back down, and then had a massive push up. So we're bullish on the weekly chart. So with that, if we just mark the highs and the lows, this is the high. It looks like it's just spiked that low right now on this current candle. So let's see how it will close. Okay, so if it continues going down, where will it go to? It could probably come all the way to these lows here, possibly. And then if it's going to go to the highs, this will be a nice target up here, the 1.11, or let's say 1.12. Okay. So let's look at daily charts. So daily charts is looking very bearish. Look at this. So price has pushed all the way up. It got to these highs, pulled back down, then pushed up again, and only just spiked, it wicked this high here, and then now it's pushed down and it's broken this structure down here. So it's broken that structure and it's looking very weak, right? So what is that telling us? It's telling us that these lows here, so if I to write another, sorry, to put another level there, it might actually come all the way to this level. And if this is broken, it can come down to these levels here. So we have a bit more level to look at on Euro USD if it's going to go down. So that is what we have there. Or the alternative, if it's going to push up, as long as it's once it goes above this level here, this last bearish candle here, once it goes above it, then it will turn bullish. Because if this candle, this current candle, if it closes bullish, then that will be a bullish engulfing candle, and then we'll look for price to go up. Okay. Lovely. Okay, so let's look at the 4-hour chart and see what we have. So on the 4 hours, you can see it clearly. But this one is even clearer than the pound USD. So if we look at it from these highs here, what can you see? Price has pushed down, broke structure there. So from a lower low, what do you expect next? A lower high. From this lower high, what do you expect next? A lower low. From this lower low, what do you expect? A lower high. From this lower high here, what do you expect? Lower low. From this level here, you see, so just follow your structure. Just follow the process that you have put down. Follow your trade plan. Always follow your trade plan, because that is all that you need to have consistency in your trading. See, price is just following the structure here. Lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. This level here is then gone to okay, so from that level there, where are we now? Okay, so it's gone to a lower low now. You can see it clearly. It's broken that lower low. It's broken this last low here with this candle here. So what can we expect? As long as, so as I'm looking at this now, as long as it's below this level here, I'll be bearish. So I'll be looking for price to continue going down to these lows here. And then if it does not give me a rejection candle here, maybe I'll just look for a pullback and then for it to continue going further down. Okay. So we're bearish. We're really bearish on Euro USD. So if we just do a comparison, look at this. If you're going to take a sell between pound USD and Euro USD, which one will you go for? Which one looks clearer? Just put it in the chat there. Let's see. 1 or 2, GU or EU. Which one would you go for? All right, EU. Very good. Okay. So you can see how you pick which pair you can trade if you are comparing them. If you have maybe like 10 pairs and you're not necessarily trading all the 10 pairs, you're just looking for which one gives you the best setup. You can see it there for yourself. You don't need any indicator. You can see it. It's breaking structure. Lower lows, lower highs. Lower lows, lower highs. Lower lows, lower highs. Lower lows. Right? So right now, it's going to give us a lower high somewhere. Okay, so as long as you put your stop loss up here, for instance, you are good for a sell. And if it stops you out, that's fine. Just look for a pullback and then you go for the opposite direction. Okay, so that is how you pick which pairs give you a better setup. Okay, so let's look at Euro Yen. Let's see what we have on Euro Yen. So Euro Yen as well. This is very, very sideways. Okay, so let's look at this. The last high was here. That was last week. And this is last week's low. So it looks like from this weekly chart, what do you think? It looks like this thing wants to come to this high first, at least before it does anything else. It looks like it from this candle that we have right now. It looks like it wants to push up, maybe take liquidity there before going down, if it's going to go down, or break these highs, pull back, and then continue upwards, maybe to these highs here. Okay, so that's the weekly chart. But the weekly chart right now is looking fairly bullish, even though overall, if you look at all this here, this is a big sideways movement. It's not giving you nice higher highs, higher lows, like the other two pairs we looked at earlier. Okay, this one is in the beginning stages of trying to decide whether it's going to go up or it's going to go down. But if you just focus on these last two candles, last week and this week, that has just started today, just this Monday now, it's gone up quite a number of pips, right? And it looks like it might actually go all the way up. Maybe by tomorrow, it will go all the way up to these highs here. So let's see what price will do. Okay. So I'm fairly bullish there. Let's look at it on the daily. So now the daily is a bit clearer. You can see this. This is the lows. And what has it done from here? It pushed up, then pushed back down, giving you a lower low, lower high. Then it's pushed up again and pushed back down. And then it's pushed up and it's pushed back down. So right now, what do you think? See, look at this nice doji here. And usually when you see a doji, it's showing hesitation to continue in the previous direction that it was going, and is a possible reversal. Okay, and what has price done? By the time this one closes now, if it closes bullish like this, that'll be very nice. And that tells us that there is possible potential for price to just maybe just pull back a little bit and then go to these highs here. Okay, so that's how you look at your charts. When you're doing a top-down analysis, you have to look at what is the story that the chart is telling you. You have to be able to read or interpret what each candle is telling you. Okay, so this high here, 164. 164 point, let's say 164.2 is a possible level for it to hit right up there. Okay, so let's see if price will go there. So we are bullish on Euro Yen. All right, okay, let's look at the 4 hours. That was the daily. Okay, so on the 4 hours chart, what can you see? So from these highs here, it's pushed all the way down. Okay, let's even start from here. Let's remove that one. Oops. Okay, so it's pushed down here, pushed up. Let's say it's pushed down there. So this is a market structure shift. Okay, it's pushed back up, then pushed all the way down. You see, there's no pullback handle in between here. The place to get your pullback handle is from here. Then it pushed up and then pushed back down. Did it take that low? I don't think so. It was probably a double bottom there. Okay. And then what has it done now? So with this push down, what did it do? It broke it here. So you can see it, you can physically see it, right? At the close of that candle, at the close of this first candle for today, it broke these highs here. Okay. So that tells you that there's some bullishness in the euro yen on this 4-hour chart. And what did it do? So on this 4-hour chart, it's kind of stalled a bit, just went sideways before it pushed up. So this high here looks like a possible level first as a first target, and then before it comes to the very highs there. Okay. So except we get a big bearish candle that then closes below these lows here before I'll look for bearishness. But right now it's looking very bullish. So that's like a divergence. If you are looking at Euro USD is looking very bearish. Meanwhile, Euro Yen is looking quite bullish, right? So just be, sometimes the correlation does not work that much. Okay. Let's look at pound yen. It's the pound yen. Okay. So on this as well, let's look at the highs. This is the highs. The last high for last week. This is the low of last week. And price is actually almost already at the highs there. So something is going to happen once it gets to these highs here. It's either it breaks it, pulls back down, and then continues to these highs here. That is one option. The other option is for it to get to these highs here and then have a big bearish candle to close back down here. So it can do that. The third thing it can do is just for it to just continue sideways. Okay, it can continue sideways right there. So let's see what price will do. This is the weekly chart anyway. So we just use the weekly chart just to see what price is doing. We're not taking trades necessarily from the weekly chart. So let's look at the daily and see what is happening. So look at this, very nicely done here. It's almost already at this high. So I think if you look at the probability, you know, the trading is a probability business. So what is the probability of price coming to hit these highs here compared to the probability of price just stalling from this way, this level here, and going all the way to these lows here? Which one is it likely to do first? Which one do you think is likely to hit first? To hit these highs here or to hit these lows here? One or two? Which one what do you think? Okay, let me see your interaction in the charts. What do you think will likely happen? Would it hit the highs there? The highs? Okay, yes, good. Thank you, Billionaire there. Yes, it's more likely that it's going to hit this high first. I mean, just logically looking at it, logically speaking, it would just be nice for it to just hit these highs first than for it to just stall right where it is right now and then go all the way down to that level there. So definitely it looks like it will take these highs out first. Okay, so let's look at the 4-hour chart. So, and on the 4-hour chart, I mean, all day it's just been very bullish, as we can see. So if we look at the last from these levels here, okay, price came down. Let's say it broke this level here. Let me have a clean chart. Let me do this. Okay, so price pushed down to these lows here, tried to push up, then came back down. Let's say it broke that structure there, a market structure shift, pulled back up, then went all the way down, there's a tiny pullback candle there, and then it pushed all the way down, then pushed back up, and then pushed down. Right now, from these lows here, what did it do? It pushed back up to break this low here. I mean, this lower high here. So on the break of this lower high here, then you are beginning to think bullishness. Okay, because it has broken your structure. Remember, when we are trading the structure, lower lows, lower highs. So lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. The time we will stop looking for bearishness is when price perhaps comes down and then breaks this last lower high. Once it breaks it, that's a break of structure or a trend change. Okay, so we'll then just look for a pullback and then continue upwards. And that is what price has done here. Okay, you can see it's broken this structure. It's actually giving you a nice pullback, and then it's gone all the way up. Okay, which is very good. So it looks like, in fact, I would like it to just go up. Just take these highs out, so we know that that is fine. So once it takes that out, then we'll wait to see what price does. Once it takes this out, it will probably pull back down and then continue upwards if it wants to continue going up. Or what it could do, it will break that high, come back down. Then if it gives you a lower high there, you want to wait for it to break this low. Okay, once it breaks that low, just look for another pullback and then for it to go back down with the trade. Okay, but at the moment, we're looking very bullish. Okay, so these are all quite clear now. Let me look at one more pair. Let me do gold, because I know a number of us like gold pair as well. So let's look at what gold is doing. So this is gold weekly chart. Let's look at the high. So this is what has happened. You can see it's been very, very bullish. So I mean, nobody needs to tell you. If you get your 6-year-old, you know, your 10-year-old, what is price doing between these levels here and these levels here? It can tell you that it's moving up. Okay, so this is last week's high, last week's low here. Okay, what is price going to do now? So let's see. Price will either come and test these lows here, because at the moment it's looking a bit bearish. So it can come all the way to these lows here, down here, and then continue going back up, because it's still very bullish on this weekly chart. Okay, or it will just stall from where it is right now and then begin to turn bullish. Okay, and then continue going up. It could do that. Or for all we know, it can then give us another bearish candle here. So once it gives us a bearish candle and breaks this last week's low, once it breaks that, we'll just look for it to pull back up, and then we'll go down maybe to these lows here. Okay, so we always have to tell ourselves what, you know, we always have to ask ourselves, what is price doing? Okay, yes, please ask your question.
Sir, good evening, sir.
Good evening.
The weekly chart,
Yes.
does each candle represents 1 week activities of in 1 week?
Yes, each candle represents 1 week.
So it means that this current candle that is forming, that very last bearish candle, represents this very.
Yes, it represents this week,
which is still forming.
Which is still forming, yes.
Yes, so it means that the color of the candle this week, gold is bearish so far. Is that it?
No, well, it means that the candle is still forming. We can't make any decisions yet on this weekly chart. We can only say that price would likely do X or Y, but we can't take any decision right now.
Okay.
Because it's still forming. It has not until the candle closes by Friday before we can take a decision if we are trading only the weekly charts.
Okay.
Yes. So we're only looking at the weekly chart to help us see what is price doing overall just to look at the bigger picture.
Okay. Okay.
Okay,
Thank you so much, sir.
wonderful. Okay, so we then go to the daily charts and look at what is happening. Okay, we see price. Let's take it from this lows here. It's pushed up, pushed the lower high, pushed back up to break these highs here. And then it pushed all the way up to these highs here. So right now, though we are still very bullish, because if you look at where is your valid range, your valid range is between these highs here and the last opposite candle. If you go back, it's down here. So this is your last valid range. So technically speaking, until price breaks this low here, before you will say you are bearish. However, this is the daily chart. Okay, so it will take a lot for it to do that. Now, we have those rejection candles we talked about, your dojis, your kangaroo tails, your bearish engulfing candles. Well, engulfing candles. So it can be bearish or it can be bullish. Okay, so what has it done here? It has pushed up to this level here and giving you a doji. Now, a combination of this doji and this bearish candle will give you some sense of bearishness at the moment. So what are you looking at? So you're most likely going to say to yourself that if you didn't take a sell today, right, you'll be waiting for price to come back up, pull back up. As long as it does not break above these highs here, you'll be waiting for price to pull back and then for it to go further down to these lows here on this daily chart. Yes, please ask the question. Can you unmute?
Sorry, sir.
Okay.
Does the color of the doji matter in identifying, in predicting the trend?
No, it doesn't matter. The color is
So,
not important. It's just the pattern. So,
okay.
so what happens is, what I like to do, if I see a doji, I like to wait for one more candle. If I'm going to be conservative, I would like for one more candle to happen before I take a decision whether I want to sell or buy. So if you look at what happened here, now mind you, this is the daily chart. Okay, look at this. It pushed up, then it gave you a doji, right? So you're waiting to see, okay, what is going to happen next? And then it gives you another doji, right? And then it gives you another doji. So what does that tell you? The price is just hesitating. It doesn't know what it wants to do exactly yet. The buyers and the sellers are still at equilibrium. So nobody is winning the battle, as it were. So it's just going sideways here. Then by the time it gives you this bearish candle, then I'll be tempted to take a sell. Okay? Now watch this. Yes, I'll be tempted to take a sell because I can see that this highs here has been holding and I'm having dojis. Then with this full bearish candle, I'll be highly tempted to take a sell. Now, if I take a sell on a pullback, where will I put my stop loss? I put my stop loss at the highs there. This is on the daily charts. If you are trading the daily charts.
Okay.
Okay. Now look at this. What is this candle? By the time this candle closes, what is this? This is a bullish engulfing candle. What does a bullish engulfing candle tell you? When price has been stalling, goes down, and then gives you a bullish candle there. Tells you that price is likely to go up. So leave your sell that you are already in, and then you enter your buys. So even if it takes you out here on the sell, you now have all this as your winners. That's why we always say you are trading over a series of trades. You're not just looking at one trade. So you may be stopped out on one trade, but you take the next setup. So once the setup appears, just take it and just expect that price will move, will have a follow through. Okay, so if I was going to even do this a bit further, because I do not trade on the daily chart. Okay, so let's even look at this. Let me take this candle here. Okay, so if this one had closed now, I'll go to this chart here. Let's look at the, if anything happened on the 15 minutes on that candle there. So on the 15 minutes here, oh, okay, I'm not seeing any. Well, you may have gotten some nice sells. So if we're, so at the end of that candle, so you just come maybe during London session. Maybe if you took a sell here, you may have been stopped out on this one here. Then on this push back down, you're waiting for it to go back up. Then, well, actually, you might just get some stop outs actually. But then eventually, at the break here, you then take these buys here. Okay, because the way I'm looking at this is looking more like this is a break of structure, then break of structure to the top side. You put your another entry for buys, then it comes all the way here, takes you out, and then it goes back up. So you may have a losing trade there. Okay, but eventually, the following day, well, let's move this one here. You then get some nice setups. Where is this now? So you can look at this. So you see break of structure there. Perhaps you enter here, you get some profits there. Then it comes here, push back in, gives you a market structure shift, pulls back down, pulls up, pulls back down here. It does not break with a body close, and then it goes all the way. So even if you put your stop loss down here, that's still safe, but you can see a nice structure flow there. Okay, so that's on the 15 minutes where I usually take my trades. Okay, so let's go back to the 4 hours and see what is happening. Oh no, okay, we're looking at the daily earlier. Okay, so daily charts. So right now we have some bearishness in this setup here. So let's see, what will price do? Will price come down and break these lows here? I think it will actually come all the way and break these lows here because it's quite close to it already. So it looks more probable that it will break this low than for it to just reverse right now and take this high out. Right, that looks more probable to what is more likely to happen. So let's look at the 4-hour chart where we can take a trade. Oh wow, very nice. This is very nice. So what can you see from these highs here? What can you see? See price push down, push back up, then push back down again, break of structure there. Okay, and then so if you can take one of two things. If you take just the candle break, sorry, the wicks of the candle as your break of structure, you take this level here as your break of structure, and this should be your pullback, and then it will go down. If you take the body of the candle as your structure break, so this will be your structure break down here. And then with this structure break, what did price do next? A push back up. Where is your valid range? Okay, when it was down here, where will be your valid range? Your valid range will be up here because it started pushing down from up here, from this zone here. So as long as it does not take this zone out, we'll be bearish. Okay, so price then comes in. It does not take this high out, and then it begins to go down low. Okay, and what does it do? Look at these two candles. If you look at the combination of these two candles, it gives you a nice bearish engulfing candle. So you can put your stop loss down up there and just look for, actually, I would like this one to push up a bit before it goes down. So this will be the first level, first target there. Then we'll look for lower targets. So right now we're very bearish. So EU is very bearish. Gold is bearish as well. GU2 is bearish, but it's a bit strong. GU is a bit is stronger. You can see it's a bit it's looking too strong for my liking compared to EU, right? And but this is looking more like price that wants to go down. Okay, so it will at least hit these lows here first, and then if this is if it hits that, let's see, then it may come down to these lows here, maybe somewhere there or there. Okay, any of those levels. Or what it can even do, like gold likes to do, it can just come in here, then give you a nice kangaroo tail there, and then begin to go up. Because remember, on the weekly chart, we are still very, very bullish. So this is still the highs. Okay, this is still a new, in fact, a new high, all-time high. You know, from your weekly chart, you can see it's still very, very bullish, very bullish. So it can still go up, but at the moment it's just pulling back to see. So we want to see how far can it go, how far down can it go before the buyers come in again to push it back up. Okay, good. So do we have any questions? Okay, yes, please go ahead.
All right, thank you, sir. My question is based on the entering trades on pullback.
Okay.
When you say to enter on a pullback, how far does the pullback go before you can go in?
Okay, that's an excellent question. Okay, so depending on the time frame that you are trading on. So let me use this 4-hour chart, for instance. Let's even use this Euro USD, because that gives us a nice setup. Okay, let me remove this one here. So we see price from these highs here. It pushes and closes down here, break of structure, pull back up, and then push down. Now, there are a number of tools you can use. There's a Fibonacci tool. Where is it here? This one here. So once you see this pullback, this first opposite candle, in fact, before you see that opposite candle, so the first one, once you see price break structure here, just put your Fibonacci there, and then you're looking for it, typically speaking, for price to come to the 50 level for your pullback zone, for it to go to then continue in the direction it was going. Sometimes it will go as high as the 168. Is it the 168 or 618.1 or something like that, or the 70 level? Okay, either the 68 level or the 70 level. Okay, as your Fibonacci levels. Okay, I don't use it that much, so I don't use Fibonacci that much. I used to use it many years ago, or well, a good while ago. I don't use it that often. So what I do instead, so if you're just sticking to only one time frame, I'll wait for the candlestick to give me some bearishness. So when it's pulling back like this, I'll wait for this bearish candle, and then I can enter at the close of this bearish candle and just put my stop loss up there. That is one way. Another option is to say, okay, for this candle, I can see price pushing back up here. So all I'm going to do, so prices are these lows here. So I'll then go to a lower time frame, maybe a 15 minutes time frame. Okay, so if I go to a 15 minutes time frame, let's look at that. Okay, this is it here. Oops. And then I'll just be looking for a bearish engulfing candle. Right here, where does that happen? So from these lows here, it just goes all the way up. I can't see any bearish. So look at these ones here. You see a number of them here. Look at a nice kangaroo tail here, a bearish engulfing candle, a big bullish candle, but eventually this was then taken out here. Right? So you then enter once it breaks it there, because you're looking for bearishness. Once it breaks this, you can then enter on the next candle.
Mm-hmm.
So without using any other tool, you're just looking for your bearishness. Or the other thing you can even do, where is this thing now? Okay, you can put this zigzag indicator. Let me make this a bit bigger. Okay, so once you put that in, you can even go to as low as 5 minutes or even lower. But let's use 5 minutes for instance. So we're looking for candle for a break of structure to the lower side. So all this here is giving us higher highs until it gets here. So you can see, it just spiked it here. It didn't break it with the body. So maybe if you left that out and just left it, you're waiting for a break. So it pushes up, it pushes down, then pushes up, then pushes down here. So it just breaks it right there. Once it breaks it on this candle here, on this first candle that breaks it with a body, you just enter on your next candle. Okay, so you have multiple ways that you can enter. In fact, you could even use a moving average if you want to. But typically speaking, all you just need, if you go to that time frame, that 4-hour time frame, if you don't have the time to be going between higher time frame and lower time frames, just wait for your bearish candle, and then you just enter on the close of that candle. Just enter at the close of that candle. If it stops you out, that's fine. Just wait again for another bearish candle, as long as it's still within your range, your valid range. Right? So let me see. So where is our valid range? Our last valid range is between these lows here and these highs here. So as long as it's between this level here and these highs here, all we're looking for is bearish candles. Because what will price typically do? If price is pushing back up, at some point, if the sellers are going to come in, they will begin to show some bearishness. So you just enter on the bearish candle. Does that answer your question?
Yes, sir.
Thank you. Billionaire Sheila.
Good evening, sir.
Good evening, sir.
Yeah, market has not been too good to me today.
In fact.
No.
So I want to ask, what is the best approach to I don't know if this is the way to ask the question, but I want to ask, what's the best approach to use in setting your take profit and stop loss? Is using pips the best, or you're just using the range, your last, like you've been showing us now? I noticed that you usually put the stop loss at um the last
last swing,
range, so to say.
high,
Yeah, yes,
last low.
yes, last low. Because I've been doing more of, so when I want to do my trade setup, I just do 50 pips as my stop loss, and then maybe my take profit 100 pips. I've been doing more of that, but today it used to work for me, but today it wasn't working at all. I mean, so you just take it out, and then meanwhile, my setup is valid in the sense that if I detect it will be going bullish, it will still go bullish, but it will take me out before start going bullish. So um I also want to know if using pips is not the best option for setting stop loss and take profits.
Okay, excellent question. Thank you for that question. So, so this is the Euro USD. Okay, we still look at this downtrend here. Let's do this clean chart here. Let's see. I'll remove these ones. So, or do we look for a different chart? Let's do. Which one will give me a good chart here now? I want a nice chart. Okay, let's see pound USD. Okay, good. Let's look at this one here. This nice push up. Let's look at this nice push up here. Okay. So we want to let me expand this. So from these lows here, what did price do? If you said this was your low, and this was, if you look at the range, if you say where's your valid range, okay, so if you are looking at this very carefully, this is a lower low, and then it started from somewhere here. Okay, it pushed down, and then it pushed back up and broke these levels here. So once it breaks it here, where will be your ideal place if you're going to take a long, that's to take a buy? Where will be the ideal place to place your stop loss? It will be at these lows. Okay, it will be at those lows there. Then if you now say to yourself, okay, I put my stop loss at the lows there, meaning that if price supposing it stops going up and then decides to come all the way down, as soon as it gets to these lows here, you're no longer interested in a long, you're no longer interested in a buy, because it invalidates that range. Okay, so that's for placing your stop loss. Now let's look at the other bit. Now price has gone all the way up. Now when it's pushing up, where do you think it's likely to go? If you look to your left, right? If you look to your left and price is pushing up here, where is it likely to go? Remember, it's always seeking liquidity. Is always seeking to break a high. So you remember, if we are doing a trend upwards, what does it do? What's the characteristics of a trend upwards? It breaks the last high, then pushes back down. Then once it starts pushing up, what is it likely to do? It's likely to break this high again, right? Then once it pushes down again, what is it going to do when it begins to push up? It's to break this high again, right? So if you take your buy right here, where is it likely to go first? You know, where will be the first target? It will be to break these highs here. So once it breaks this high here and it's still looking bullish, where is it likely to go next? Is this next high here?
This time.
Right? So that way you can put your take profits just at the next high because you're expecting price to push up to that level. Now, there are cases where you don't have anything to the left. So like we have on gold, for instance, in the last few weeks, it's just been going up. It's been making new highs, all-time highs. Okay, it's not been at this 30 level, the 30,000 level. It's never been there. Okay, so this is a new high for it. So what do you do in that case? Just take an estimate. Okay, if you look at this, let me remove all these lines. Remove this one too. Okay, so if you squeeze this all in, so look at all this. Let me even go to monthly chart. Okay, let's do the weekly chart. So you can see this weekly chart. There's nothing to the left for it to be like your target level. There's nothing to the left. Okay, so if you come back to your 4 hours, let me make this bigger. Oops. Okay, so let's say you are here at this level here. Okay, now what you're going to do is use a bit of your intuition and say, okay, you can take a measurement, just eyeball it and say, okay, from these lows here, what has price done? It's pushed up quite a bit. So maybe if you say this is like 300 pips, let me even measure it. So from these lows here to this level here, so this is like 300 pips here. Okay, and then from this other high here to the next level, this is 28. To this level here, this is 600. So let's just break it that, okay, this is like 26. Now, let's say from here. So it's not an exact science. It's just taking a rough figure. So you can see this is like 500 before it starts stalling. Right. So if you say to yourself, okay, I'm very bullish and I enter a buy. So on the break of this structure here, I enter a buy here. I put my stop loss down there. How many pips am I expecting? So given that you've seen that roughly it will do like 300 pips. So you can just put your pips there. Maybe just a little bit below your 300. So this has gone all the way to like 470. Okay, so you can estimate from what price is doing that how far can it go before it starts stalling. So you use that as your estimation, particularly in cases where you don't have anything to the left. But when you have some price action to the left, just target those highs if it's going up and if it's coming down. So for instance, now, this is coming down, right? Price is here right now. Where is it likely to go next? It's likely to take out these lows here first if it's going to go down, right? Because this is the last low before a push up. So what is it likely to do next? It's likely to take out these lows first. So once it takes out this low, what do you expect? Your next valid range will be between wherever it stops here and this high here. So as long as it's between this high and this low here, you're looking for the next lower low. Where is the next lower low? Right? If we take this horizontal line, so if we say, if it comes all the way to this level, for instance, okay, where is the next lower low from this zone here? It will be down here. Right? So you can see those levels where it has hesitations. You're just looking for those levels. So if it decides to do a nice trend downwards, so it will pull back and then push back down, pull back and then push back down. And then you change it again. Once it then breaks this last structure here, you then expect a pull back and then a pullback up to this zone here, another pullback, and then pullback or a push up. So you just be looking for it from one zone to the other. And in fact, another nice way to look at this is if you come to the top here, there's it says line chart. Okay, this top here, you can see line chart, you can see bar chart, you can see candlesticks. So if you click on the line chart, just look at it. If it's going to push down, where is it going to? It will come to these lows possibly. Then if it breaks these lows here, it's likely to come to these lows here. If it breaks this one here, it's likely to come to this zone here. See, just like that. So that's how it will always do it. It will go from zone to zone, from level to level. It's like you're building. After you do your foundation and you want to do is a story building, you do your decking. And then once you do that one, you go to the next level. You know that to get your next decking, you need to get your lintel level. You know, you get your windows, your lintel level. After your lintel level, you then get your decking again. And then you go up. So just like that, from level to level.
Okay, sir. So the last question I want to ask, sir. So in that case, is it appropriate to allow your stop loss to be higher than your take profit? Is it allowed? Is it okay?
That's a tricky question. Tricky in the sense that it depends on the kind of system you're using. So if you're using a system that has a high frequency of wins, then you could use something like that. So you can have a stop loss of 100 pips and then take profit of maybe 30 pips or 50 pips, right? Or maybe even 200 pips stop loss and then maybe a 50 pips take profit, right? So as long as you know that consistently you get more of those 50 pips than for it to hit the 200 pips. Because if it hits the 200 pips, how many 50 pips do you need to make up that loss?
Yeah.
Okay, so that would be the thinking that you have to look at. Conversely, at least for many of the pairs, they'll do at least 1 for 1 first.
Yes.
Or 1 for a little bit more. If you do 200 pips, well, 200 pips are usually on the high side. So if that's, depending on the time frame, let's put it in context. So depending on the time frame that you're on. So on this time frame, for instance, which time frame are we on? This is the 4-hour chart. Okay. So if I entered, well, I won't like to enter a sell right here, right now. I'll prefer it to push up a bit, maybe to this zone here. And then I can put my stop loss there. This is around 200 pips, right? And then I'll go for this target here. I'll go for these lows here first. And then go for these lows here. So this first one is about 250 something, or maybe I even take the highs there. So let's say just about 200. So if I put it at this high, this 230 pips, and then I'm going for 200 pips, right? Initially, then my next target is down here, 700 pips. Okay. In fact, I know of a chap who does, once he puts his stop loss, depending on how far it is, his first default take profit is 30 pips. Then the next one is, I think it's 80 pips. Then the next one, I think is 120 or something like that. And then he splits his trades into smaller bits that way. And then it goes for 200 pips, 400 pips, just like that. He just keeps expanding them like that. But by default, his first take profit is always 30 pips. Okay. But the remaining ones, he then begins to space them out a lot more. All right. So you have to look at your trade strategy and see how often does it hit your take profit. And at that take profit level, how is it in connection, or when you look at the ratio of your stop loss level and your take profit level?
Mm.
So does it go, let's say 1 to 1.4 or 1.5, right?
Okay.
Before it reverses.
Okay.
So, but by and large, for many trade systems, especially trend following systems, they will give you a lot more. So imagine if you were able to enter from somewhere down here, right? And you put your stop loss down there. So even if you took your first take profit there, you can leave the remaining parts of the trades to just go, to just continue going until you get to these highs here. And then you get a signal for you to begin to sell. Okay.
Thank you, sir.
So that even if the first take profit is lower compared to your, so if this is 100 pips down here, and then this first pips here is maybe like 50 or 40, these other ones here, as long as it's able to hit these other levels here, then you are good to go.
Okay.
Okay. And another way to even manage your trades is that once it hits this first take profit, just don't leave your stop loss down there. You can reduce it, either move it to break even.
Okay.
Right, to where your entry was, or move it to somewhere, just reduce it so that it's not as large again. So once price does what it wants to do here, if it pushes up, that's nice. If it pushes back down, your stop loss, even if it hits you down here, is still better than it to come all the way to the lows here.
Yes.
Okay, so it's a question of you looking at your trades. How often does it hit your take profits?
Mm.
And then you look at the ratio compared to your stop loss levels.
Okay.
Okay.
Thank you, sir.
You're welcome. Do we have any other question? Oh, wow, we've gone way beyond our time today. Supposed to be just 30 minutes, but that's fine. But it's good. We had excellent questions today. So that's wonderful. Okay. So we'll be back again next week. Let's see what the price action does for the rest of this week. Just take note of your levels and continue to follow your trade process. Don't follow shining objects. Okay, just follow your own trading system and obey your rules, your own rules. Okay, beautiful. Thank you very much, Mr. Nathan. Thank you.
Thank you, sir.
You're
Have
welcome.
a nice rest.
Thank you so much, sir.
Thank you very much. So we'll meet again next week. Thank you. Okay.